Granoff, Chapter 2, Nature of Funds and Elements of Financial Statements. Our coverage, the nature of funds. Government and not-for-profit entities establish their accounting systems on a fund basis. The term fund has a different meaning than it does in business accounting. We also cover the elements of financial statements for state and local government and not-for-profit entities. Let's look at funds from a business perspective. One company, financial statements are prepared for the company and its subsidiaries. Fund used in an informal term with multiple meanings. This may refer to working capital, current net assets. This may refer to cash or investments available, or this may have many other definitions. The company is a single fiscal and accounting entity. Assets equal liabilities plus equity. Equity is usually called owner's equity. This is business, for-profit accounting. Funds, governmental, multiple entities, general government, electric, water utilities, libraries, parks, capital projects, housing, human services, etc. The fund is used as a formal term, a single meaning. This is critical. The fund is a fiscal and accounting entity with a self-balancing set of accounts. Each fund is like its own entity. In other words, a fund is an entity with its own set of books, chart of accounts, general journal, general ledger, trial balances, and financial statements. Notice that the term entity is shown in quotes. It's one government, but multiple entities within the government. Let's look at the elements of government financial statements. 7 key elements, 5 relating to financial position and 2 relating to the resource flows. This is our new GASB Statement 63. Assets, resources with present service capacity. Liabilities, present obligations to sacrifice resources. Deferred outflows of resources, the consumption of net assets applicable to a future reporting period. Deferred inflow of resources, the acquisition of net assets applicable to a future reporting period. Net position, the residual of all elements presented in a statement of financial position. Assets plus deferred outflows minus the liabilities minus deferred inflows. This is a critical statement of what constitutes net position. Outflow of resources, consumption of net assets applicable to the time period. Inflow of resources, acquisition of net assets applicable to the reporting period. These are the 7 key elements that we need to be comfortable with. Again, 5 relating to financial position and 2 relating to resource flows. Let's continue with this. GASB Statement 63 requires that governments, unlike businesses, must report deferred items in a single category. Thus, a statement of position might be assets plus the deferred outflow of resources minus liabilities minus deferred inflow of resources equal net position. And this is just a different way of showing what we had on the previous slide. Let's look at funds for state and local governments. This is based on Statement 63. Fund accounting uses the equation assets plus deferred outflows equal liabilities plus deferred inflows plus fund balance. In a slightly different form, assets plus deferred outflows minus liabilities minus deferred inflows equal fund balance. So when we look at the equation assets equal liabilities plus a residual, now that residual has become fund balance, and we have added deferred inflows and deferred outflows. An important distinction: in financial statements that are prepared on a full accrual basis, the residual is referred to as net position. And we have this for the proprietary funds and fiduciary funds and government-wide financial reporting. In a statement that is prepared on a modified accrual basis, this is referred to as fund balance. We use fund balance for our 5 governmental funds: general, special revenue, capital project, debt service, and permanent. So the wording, assets equal liabilities plus, the wording, net position, refers to financial statements that are prepared on full accrual basis. Fund balance refers to statements that are prepared on a modified accrual basis. Note, both fund balance and net position, like owner's equity, are residuals, the difference between assets and deferred outflows, and the claims against those assets, liabilities, and deferred inflows. We will work with this distinction as we cover the 5 governmental funds, 2 proprietary funds, and the 2 fiduciary funds, as well as the government-wide GASB 34 financial reporting. We prepare financial statements for each of these, and each has its own residual. Now let's look at not-for-profit entities. These entities use fund accounting internally to ensure control of funds, but do not report these funds externally. Not-for-profit entities classify net assets into 3 groups: unrestricted, temporarily restricted, and permanently restricted. Assets equal liabilities plus net assets with these 3 groups, and we will cover this in much more detail as we move into not-for-profit entities later this semester. Not-for-profit entities continued. The FASB regulates not-for-profit reporting for non-governmental organization and only requires 6 totals: total assets, total liabilities, total net assets, broken into the unrestricted, temporarily restricted, and permanently restricted. And as you can see, as I mentioned earlier, we cover this in detail in chapters 12, 13, and 14.